But let's talk about the real world, right? And that's true. None of it's there.
Even in the underwriting
Even
process.
in underwriting.
No,
Well,
I mean,
no.
you have to,
In the underwriting process, they have to present all their medical
right,
information.
But that's
but that's not.
That's
right.
absolutely HIPAA compliant.
The owner doesn't see that. We collect the apps outside of that. Now, with a small company and you see a claim is going on for, some condition, you typically know who it is, right? In the real world, it does. So I get employers asking me this all the time. And I always tell them a couple of things. One, if you've got an employee that gets sick and they're hitting your claims fund, do not go out and try to fire them. Now, on the other hand, if you've got issues, make sure you document the heck out of him because he's going to come back and ask you about that, and you need to be protected. The second thing I see happen all the time is employers will go, whoa, if I'm going to hire somebody, I want to watch their age, I want to watch this. I say, again, you need to be very careful about that. But the reality is, if I've got two very qualified employees, I make a decision, I don't care legally or not, that's going to be in that guy's mind. It's there, it's real. And it doesn't matter whether it's fully insured or self-insured, that happens, right? And so I tell my clients, look, that's something you can't make a decision on. Document, make sure you know why, because if anybody comes back, you better have shown that it's for other reasons. I'm not going to say it doesn't come into play. Typically, people do know who it is. I mean, they know. If you're a company of 6, you know who's sick. People talk. Oh, I just went to the hospital. He was out for 3. The reality is you probably know, but don't make decisions on it. Right?
Yes.
Does that make sense? It's like anything in the world. It's very sticky in today's lawsuits. You got to be really careful about that as a business owner.
Does that answer your question?
Yeah, well, I mean, I think what you're saying is perfectly makes sense. I guess my question is, because it says it here in the brochure under the claims utilization report.
Yeah, but it doesn't give you the
But it
personal name.
shows,
So we'll see, like you'll get a report that says you have.
well, it doesn't provide specific information unless the employer obtains a HIPAA authorization from the employee.
Right, yeah.
Thus, could imply that employer says, hey, we would like everybody to sign this so we can help you manage your health care better, yada, yada, yada. So I'm just,
Yeah, they gotta be careful what they use that for if they did that,
Right.
right?
Yeah.
They better be saying, we're gonna put a
there's
wellness
a
program in
fine line.
place,
So I would just say
and
there's
we wanna
that
make sure that we're
protection.
covering your needs, and we're doing it for that. If you see them do that, one thing. If you see you get HIPAA and fire, there's lawsuits. I mean, you can't use it for that.
This is a really powerful endorsement of the idea of having a healthcare advisor, not just an agent, because your agent's not going to care a lick about that. All they want to do is sell policy.
Right.
We need not to have that. We need to have guys like Mike that understand there's implications, there's employment practices implications, there's legal implications, there's HIPAA implications. All this is an integrated fine web that's extremely complicated to manage, and it needs to be somebody that's paying attention to it.
That's why you need HR services. I mean, I had, to go along the same line, right? I had somebody who wanted to put insurance in their place. Yesterday, I was talking to them, but most of their employees are 1099s. Now, I know insurance companies that will give them insurance, but I told them don't do that. I mean, you're already treating them very much like an employee. You don't want a Department of Labor audit come in and go, they're really your employees, not to give insurance, give me taxes back for 5 years. Don't expose yourself. Make them employees if you want to do that. So these types of things, whether they're HIPAA, whether they're Department of Labor, they come into place.
Do you want to ask a question?
Yes.
What you were talking about, the level funding, and plus on the PPCs, there's 2 things. One, on the level funding, I'm an HR consultant, and I've ran companies, HR companies like First Horizon Home Loan, Source Corp, International Claims Service Corporation, and on and on. Okay, and what I'm doing now is I found that I can turn a lot of that and help small companies, especially startup technology companies. And my question is about that specifically. When you were talking about your how to become qualified for this, okay, you talked about companies that maybe had claims experience from other places where they came from. Okay, but what I run into often is I've got a lot of new companies that have probably, I'd say 50-year-olds to 60-year-olds, maybe 65. They've got a lot of equity, they've got investors, and they're starting to pull together something that could become like $300,000 to $400,000 a month in revenue very quickly after they finish their technology academics. So my point is, what do you do about those companies that have no claims experience?
So we medically underwrite. Basically what happens is you start out with a group of 7 to 10 people who are the initial part of the company.
Sure.
And you basically take medical applications. You calculate the rate, okay? And you basically write the policy with those 7 people. As you add people to them, they all fill out their enrollment forms. We will not re-underwrite it, but if the demographic moves more than 15%, we reserve the right to re-rate it in the middle of the year, but we won't re-underwrite it. So everybody fills it in. But next year when it renews, if you added a bunch of 50-year-olds to a group that was all 29-year-olds, you're gonna get a pretty substantial rate.
Well, sure.
But it's all predicated on medical underwriting.
Okay.
We don't care about past claims. Past claims are irrelevant. We don't need them. We don't want to look at
All right, good.
them, okay? What we care about is the medical conditions in the group as it sits today.
Okay, and so halfway through the first year they're in business, they have enough money to do some acquisitions and buy up some software development companies or whatever, so they go from 12 people to 30 people within 6 months. What does that do?
Well, we reserve the right to rate it based on demographic changes. If they're actually doing acquisitions, we may actually separate it and re-underwrite that second company separately.
Okay.
We just went through this with a nursing home, and where they were acquiring business after business after business. The first question I want to know is, what's your HR infrastructure look like? Because you don't have an HR infrastructure, you're doing that, it's a mess. We finally fired that client because it was such a disaster. They were buying nursing homes all over the country. They couldn't even give us a census. They didn't know who the people were. And once they bought the companies, a third of the people left, or they fired them. So it was a mess, okay? At the end of the day, we can accommodate that. It's not our favorite thing to do.
Okay. And then my last question is, I knew about PPCs, they're real popular up in rural Oklahoma, outside of like Tulsa and
Right.
Oklahoma City. But when you talked about the lawn company, it made me think, can you use these for like your network? If you have a small company that's in the same city for workers' comp too?
Workers' comp is a different animal.
Okay.
And having been a P&C agent, we can talk about that offline because I don't want to take up time here, but the workers' comp is a totally different animal because it's a statutory issue. And there's no credit for using them unless you're a large self-funded self-employer, and it doesn't, there's no implication that if you got a traditional workers' comp contract with a company that's actually insurance, they're gonna blow you right out the water.
Well, I guess my question was more, will the PPC, will they actually allow you to bring workers' comp claims in and use them as the selection for the doctor? And the reason I ask
That'd be
is-
up to the doctor. We wouldn't have any input into that. You know, you'll discover in our world, we want that direct primary care physician to be totally separate from us. We have nothing to say about how they operate their business. All we do is give them a credit. That's it. Our process ends right there.
Okay. Thank you.
Mike, what if you have employees you aren't sure to count as part-time or full-time? So I guess either Mike.
Three of us.
Yeah, there's three Mikes.
Mike.
It's the mic panel. Do you
Got a
want-
pretty good opportunity to get the right mic here.
Yeah, so the question is, how do we figure a full-time equivalent?
Part-time or full-time?
Part-time, full, how do you decide who's part-time, full-time? If you have an employee, I guess, the question, if I heard your question right, was, you got some guy you hire, you don't know if he's full-time or part-time.
Yeah, so I think the way to answer that would be the full-time equivalent definition is somebody that works more than 30 hours a week or 130 hours a month. And so with the ACA requirement this year moving to 50 full-time equivalent employees, the calculation that you're going to make is counting up your full-time people, counting up your full-time, your part-timers. So what you do with all your part-timers is add up all the hours that they've worked, divided by 30 in a week or 130 in a month to determine how many full-time equivalent of those part-timers, and you actually subtract your owners to come up with that number. So the big question is those variable hour employees, the people that work part-time, maybe they're also seasonal. We have some organizations that take on individuals at the end of the year for holidays, schools, those types of things. So it can kind of get tricky on the variable hour employees, but it's basically 30 hours a week or 130 a month.
I think one of the other things that comes into play with that, especially if you don't know, there's a provision in the ACA that says you have a certain amount of time, and you get to define how long that time is, to determine whether they are or not. So for instance, it's a look-back period. I can hire somebody, and if I decide my look-back period and it's set, really it could be a business reason. So a good example, one of the restaurants we do, right? They got 200 employees. They don't want to be paying, if they had to pay insurance for everybody, their food would be so costly, you wouldn't go there. So we need to figure out how to actually insure as few people as possible. So they set up a look-back period of a year. So that employee has to work for a year. Once they work for a year, we go back and we average and say, yes, they've worked average of 30 hours or not 30 hours. Now, most of their employees don't last a year. So they never end up there. You can make that look-back period a month, and they go back and they say, okay, you've worked long enough, you are working over 30 hours, you now have the right to insurance, or you don't. You know, and it's up to the company to decide, was that 1 month, 2 months, 12 months? Can't be more than 12 months, can't be less than 1 month. And you set those rules as a business rule. And then you use that look-back period, and what it almost does is it almost makes every employee have their own open enrollment date, because once they now have insurance, you don't look at it again until the next year at the same time. So it gets a little complicated inside the company, because this month, you know, these guys are eligible, and that month, these guys are eligible, right? And then you have renewals in the middle of it. It gets a little spicy, but if that's the kind of company you have, you can use that type of a process to figure out where they are. And I know your payroll systems and stuff will help you go, oh, it's time to offer insurance to this person. You need a system in place to manage that. Is that?
This can open up some discussion. What is the likelihood that a new president will repeal or dramatically reduce the Affordable Care Act? And can you define each one, if it's Trump or if it's...
Boy, I got some strong opinions. Do you want to start?
Well,
Or do you want me to start?
No, I would say this, that neither one is a good solution, and both of them are as equally unknown. The challenge here is most of what we're dealing with today is regulatory issues that have been in place now for a long enough period of time. Unwrapping them doesn't seem likely, okay? The other problem we run into is that we're still only dealing with a very, very small percentage of the population in terms of actually who's in the exchanges and who's affected directly by the ACA, except for the fact that now all the provisions of the ACA are driven down into the universe of people who are actually buying health care. The real problem here is not the government intervention, it's the escalating cost of health care, and that problem hasn't been addressed in anything that's been done. Nobody has addressed that issue. So it's actually, the whole thing with the Affordable Care Act is a smokescreen. And it's a smokescreen that's been perpetuated by the government, by the media, and people who think they know what they don't know. At the end of the day, we in the trenches see what it costs us to do this, and we just choke it. And the question is, how are we going to deal with it? Well, the solution is not going to come from the government, and it's not going to come from the politicians, and it's not going to come from the regulators. So the question to you is, how much faith do you have in the marketplace? Because the marketplace is a very fascinating thing. Think about it this way. We get this beautiful Colorado mountain stream that's running down here, and the government dropped this huge rock in the middle of it to deflect it because it wasn't going well. Well, what happened to the stream? It backed up behind the rock, eventually reached a certain level, and it went right around the rock. That's the way the marketplace works. When the government regulators stick things in our ways, we figure out a way to get around them. And eventually the marketplace will adjust itself and take on. Some of the things I showed you today are some of those ideas. The world of ideas and the world of opportunities, this is the double-edged sword for us as a company. On the one side, it's the worst thing that could happen to all of us because it's so dang expensive. But from a business perspective, I couldn't be more excited. Oh my gosh. The marketplace is going to be so dislocated, we're going to make a ton of money. We're going to make a bucketload of money. It's really cool. So one man's problem is another man's opportunity. But I have, having done this for 45 years, I have watched us go. Jimmy Carter did the Russia grain embargo in 1981, and the price of wheat went from $4 a bushel to $1 a bushel. Interest rates were at 19%. Okay? How many of you remember 8 and 19% interest rates? Okay? Not very many of you, but it was there. Guess what? We're still here. We still survived. Was it tough? Absolutely. It was a pain in the neck. It was terrible. But we managed our way through it. The marketplace is eventually, put politics aside, do what you gotta do with politics, but at the end of the day, stick to your knitting and make sure that you're helping your clients. They're gonna need you more than they've ever needed you before. It's a great opportunity for guys like Mike.
Yeah, I mean, the thing I always tell people, I wish they wouldn't have called it the Affordable Care Act or healthcare reform, especially healthcare reform, because it's not healthcare reform, it's got nothing to do with reforming healthcare, right? The problem is, it's the exact opposite, it's health insurance reform. And they're trying to control the price of healthcare through controlling the price of insurance. You can't do that, it never will work, it just won't, right? There's nothing that's addressing the cost of healthcare. Matter of fact, because of the way they've done it, it's self-perpetuating, raising rates and raising the cost of healthcare. It's actually, and if you think about it, and this is why, like Trump says, I'm going to go in there, I'm going to sign it away, and we're going to do, interstate. If one more person tells me how they're going to offer insurance across state lines, it does nothing. As you were saying, 85%, I'm going to use 80, is what they have to pay in claims. That means there's 20%. The insurance companies have to pay their buildings, pay their employees. If I was to, typical profit margin's what, 20% on a company? So there's $4 out of 100 that we could lower by bringing competition into the insurance market. It doesn't work. So you have to go, okay, we got to get that other 80%. So they go and they say, here's what's happening to my point of view, and I got no statistics, or this is just my own personal view. You go and you say, how am I going to bring that down? So they go, I'll tell you what, Mr. Doctor, you know that $400 procedure, I'm going to give you $300 for it. You want to be part of my network? Right? Most of the doctors go, no. Right? And so you get these small networks because those doctors probably are your best doctors. Right? They go, okay, I'll take the $300. So you got this migration of doctors off the networks. That's why you're seeing these smaller networks, because that's trying to control the price of healthcare. But those doctors are only making $300, so what do? They go, you know what, we could do 4 more tests and make up that money. I don't have any limitations on this stuff. So doctors are doing more tests, things are going, and so you're seeing those prices explode. And that's why you can't control the price by this. It's not going to align by a new president. You can't, you got the stuff in place. Let's say I could wipe with a pen and go, healthcare reform's gone. What's there? What a vacuum that would create, right? So I think you're seeing innovations come in the marketplace. The government said, we're going to put co-ops in. That's going to keep the price down. Anybody read anything about the co-ops going on? Yeah, they're all went bankrupt. They're now suing the government for their money back. Co-ops disappear. But that was the government trying to control the marketplace, right? You see ideas like primary care. One of the ones I hope comes to, here's one I'd like to see come to Texas, is something like monthly deductibles, okay? That's starting to happen. Now people go, monthly deductible, I don't want a monthly deductible. You do. Would you rather have a $5,000 deductible policy annual or $1,000 per month? That's $12,000. Well, you're not gonna go to the hospital in 12 months. But if you go to the hospital, you're not paying $5,000, you're gonna pay $1,000. What it eliminates is the fact that, end of the year, how many people have ever done this? I hit my deductible, everything's free. I better go get all this other stuff done. Right? That raises healthcare costs. But if you had that $1,000 deductible, would you go off and do that? Probably not, right? So that's what it's trying to eliminate. You're seeing bidding going on. You're seeing some people bring in medical bidding. So I want to get that hip replacement, I go out to the marketplace and I have doctors bid on it. Get rid of the network. Okay? And what they're finding, which is interesting, is there's an inverse proportion between the cost and quality.
Lower the cost, higher the quality.
And people, well, that happened. Well, the reality is, the biggest part of the cost is the OR room. If I have a doctor who does this thing 100 times a year versus one who does it 2 times a year, who's in the OR room longer? The doctor doesn't do well, the costs go up. The second thing is, the guy who does it 100 times a year probably has a better outcome. So we're seeing the marketplace decide that, hey, okay, this is the reality, and like the marketplace does, these things are starting to take hold. You're starting to see these policies come up. It takes them a while to adjust to it. I think Hillary's just going to make more of the same and make tweaks, adjustment. Trump says he's going to change it all. You got years for that to happen. Don't matter. You're here. You got to deal with the reality.
Questions? Other questions?
What would some of the
We
risks?
have a question.
Oh, I'm sorry.
All the stuff you're talking about makes a lot of sense, but who's doing the education to the employees? Is that an HR issue? Is that a business owner issue? Is that payroll's issue? Is that the agent's issue? Who does the education of the employee?
Great question.
All the above.
I think I'll,
All the above, and the biggest place where the education has to take place, the employer has to be committed to allowing the employees to be educated, and then give them a forum by which they have an opportunity to learn and listen. And it's a process. It's not something you're gonna do in 5 minutes or a 20-minute or a 30-minute. You gotta have a repeatable process that basically says, we need our agent. When you go to a level, these guys in the landscape business that we have, that have the direct primary care, every single one of those employees has a vested interest in making sure that they stay healthy. And now they've seen what it does. The employer's communicated, guys, we got $100,000 back. Guess what that money went? That money went into their 401ks. Hello? There's an economic reason for you to stay healthy.
You know, where you go, get your care, right? I've sat in front of clients, right, after they've got this claim data back, and we've shared it with the employees, and they're always amazed. We're doing what, where, how? I mean, why do you think all these ERs are showing up at every street corner? And I love the ones that come up and they go, hey, you got a 2-minute wait. Come in. Who's gonna, I mean, look, if I'm dying of a heart attack, which is what I should use it for, or my arm's been chopped off and I'm squirting blood everywhere, I don't want a 2-minute wait. The only reason there's a 2-minute wait is for go, oh, maybe I should check something out. I'll wait 2 minutes. Trouble is, you're gonna get charged ER rates. They're trying to sucker you to come in. That's one of the big things going on. And if you've got a self-funded plan, you need to know that with your employees. So we try to teach the employees the right time to go to ER, the right time to go to urgent care, the right time to go to Care Now or the minute clinics, time to go to your doctors, because this all affects. And you know, not only just your 401 if you're gonna put it in there, but guess what? Next year, you don't want your rates to go up. You want these things controlled. You want to see the claims fund there. So, and once they get on board, employees are pretty smart. They realize what's going on. They got a good thing going.
And back to your question, I think it's important that you have a good HR representative to work with your insurance brokers so that the client or the employees and the owner are all getting the same consistent message all the way through. And when you have that trusted relationship and people know who they can go to, then they tend to go ahead and take advantage of that.
I'll just add, now more than ever, you need good partners.
Yes.
Now more than ever, because of, you know, HIPAA and all these other 3-4 letter acronyms that quite honestly, we all can't keep track of. You need that expertise in all of these fields and technology to help with the communication.
you slightly touched on this, but what, could you get a little bit more in depth, or what are the risks with the self-funded plans?
As far as, well, let's differentiate self-funded and level funded. The risk of the self-funded plan is that you don't know what your claims liability is gonna be. So like I gave the illustration with the city of Fort Worth, they had $11 million worth of claims that they didn't have a budget for. So you potentially could have, you have an uncapped liability in a self-funded world. In a level-funded environment, you don't have that. Your liability is capped. But the other part of it that the employer has, we highly recommend that an employer not enter into a level-funded or self-funded plan if there are any kind of concerns about their financial cash flow. And the reason is that if you go into a level-funded plan and you've been in it for 6 months and you don't make your premium payment, now you have just become the insurance company, because the contract that you had with the third-party administrator to pay claims just went out. It just is now null and void, and the stop-loss carrier is gone. So now you're 100% on top of every single claim that's out there. We've got several of those where we've had a lapsed contract and we've got outstanding claims, and we'll pay the claims until we run out of money in the loss fund. But when we run out of money in the loss fund, we're done paying claims, and so is the stop-loss carrier. So we got a $50,000 heart attack that happened in February this year, where the employer quit paying premiums in March. He's on it 100%. It's all his liability now, and obviously he can't afford it. And the problem from a litigation standpoint and an HR perspective, he's taken money from his employees to pay premium which didn't get paid, that's a criminal offense. That gets you an orange suit. So, so from that perspective, you want to be sure that you're in this thing and understanding what you're getting involved in. But, you know, small business owners are in the risk business. They understand risk. They take a risk every day.
Yep.
You don't run a business with 35 employees in this environment we live in today without being a risk taker. You know, that's what you do. You take risk. One of the things that's amazing that when I go out and deal with employers on a one-on-one basis, how come nobody's told me about this before? I can deal with this. Give me information and data, I can deal with it. I don't get enough information about how this is going, and they want more. Once they get some, then they want more. So.
There's one more risk, doesn't apply to you.
Right.
But there are self-funded, even level-funded plans out there that doesn't have good terminal liabilities built into them. So if you are get into the wrong one, right, and you get a claim 2 years later, you may have to pay that because your stop loss has gone away. So you got to be very careful about making sure what the terminal liability is on the particular policy.
We refund 100 cents of every dollar, and we pick up all liabilities outside after the 9 months. It's all built into our rate, so you have no terminal liability once that 9 months runs out. A lot of our competitors, I won't name names, but most of our competitors don't do that. There's a charge against the loss fund when the money is distributed, so they're going to take a third or half of it right up front, and then you're still going to have exposure. Most of the time, when you don't renew with that particular carrier, you just give up all your money. You're not going to get your refund. Not so with us.
I have a question for Mike Baruki. If you are a company of more than 50 employees, so all the rules are getting piled on, what is a reasonable percentage of your annual budget that you can expect from healthcare?
From an employer standpoint, well, I think it's going up every year, but the rule of thumb used to be about 35% of your employee cost, including, or 35% on top of, say, the wage you pay that employee.
Right.
So 135% of a dollar is what you should expect to pay for the employee salary and benefits, including health care. That's kind of what it used to be. I'm not so sure that's still in the ballpark right
Yeah.
now.
I don't have any stats on that.
Across our block of business right now, we have 18 to 20,000 insured employees. If I looked at what I would consider the composite rate, which is the total amount of premium taken divided by the number of people, our average rate per employee per month is running right at $500. Okay, so that's $6,000. And I will tell you that, for example, in South Georgia and in Texas, the prevailing rates for an employee-only rate are running somewhere around $375 to $400. If you go to Wyoming, it's $625. So it varies dramatically by state based on the amount of competition and the networks and a lot of other things, a lot of other variables. But the thing that you have to recognize is that healthcare costs, if you're an employer over 50 lives, you have to offer healthcare to every full-time employee. That's the law, okay? You have to pay a portion of it, and in order to get the participation, you're going to have to pay at least 75 cents, 75% of the employee-only rate. So if you got a $500 employee rate, that means your employee, you're going to pay 75% of that $500 or $375 a month times 12. That will be your cost, your annual cost for just that employee. Now you don't have to pay for it, but you can pay for it for their spouse or their children, but that's voluntary. But just the employee is the piece that you're concerned about.
Was there another question about?
I have a question.
Sure.
You had said in your presentation, and I hear this constantly in what I do, younger people who are contracted, not employees,
Right.
who do not carry insurance, and they laugh about it because they say the penalty at the end of the year is so small that it doesn't make sense for me to pay it. I could go to an emergency care clinic, okay, and the penalty at the end of the year, if I don't get sick and I have to pay it out of my own pocket, is going to be insignificant compared to the amount of you know, like a web developer or a system engineer or something like that. So the point is, at what point will that stop so that they can no longer have that justification and say, I'm young, I'm healthy, I don't need health insurance, and so I'm not gonna help boost the pool with the people who need it by not participating?
Well, at the end of the day, there are other forms of insurance out there that you can buy through Aflac and through other places, limited benefit contracts that actually will provide some coverage. That plus the penalty is still less than buying a policy, okay? And at the end of the day, back to the marketplace. The marketplace is gonna dictate. The government can do whatever it wants, but we're still a free will society. Until somebody puts a gun to their head and says, you have to buy health insurance, they ain't gonna buy it, okay? Case in point, we administer short-term medical contracts. You know, short-term medical, you buy a month at a time or you buy 6 months, and it's a limited contract. We sold 8,000 policies in January. 8,000 policies. We thought we were gonna sell 1,500, okay? It killed us. The point is, and we're still selling 6,000, 7,000, 8,000 contracts a month. It's incredible how much short-term medical is being sold. There's now a provision and a law, a regulation that's being proposed to eliminate short-term medical as a viable option. Now, it ain't gonna go anywhere because of okay? They're gonna give, I don't think it's gonna have any traction, but you never know. If the regulators eliminate that short-term medical piece, what you just said could happen, where they have to go back and buy health insurance, okay?
They're not, I mean, it's a shame they don't, people don't recognize. I mean, one of the things is insurance is now really a payment system, let's be real. It's not really insurance, health insurance is not insurance, it's payment, you know, and so it doesn't matter. And that's how they see it. But, you know, I had a 26-year-old end up with colon cancer. Not having insurance is a big deal to him now, right? That happens at that age. You know, but how you get that through a 26-year-old's head ain't gonna happen. Read a 10?
Yeah. Just a follow-up on that. By and large, the penalties are relatively cheap compared to coverage for a young person, but there's a lot of uninsured people out there that are not so young and that make a fairly good salary. I've seen many cases this year where the penalty this year is going to be 2.5% of your income. 2.5% of income is a sizable number, and you're not getting anything for it now. So break that. You know, if you're paying a $4,000 or $5,000 penalty at the end of the year, you could be having insurance being taken care of your health, and you know, it's
I'm not
the
so sure
cost.
2.5, unless you're really highly paid, I'm sure 2.5 gets you there. A lot just don't see that.
Yeah.
You know, we have, how much time do we have? We're done?
I'm gonna pass this around while you
I
guys
got 1 minute.
ask me questions.
I want to make one other point, just the employers in the room. Why you need to provide health insurance to your employees has totally changed. One of the things I don't think people recognize is the Affordable Care Act, right? Affordable Care Act didn't change anything, it just changed who got hurt or what the reasons are. So there was always this big group of people that wanted to get a job, were stuck in their job because they had some medical condition, that was the only way to get insurance. Well, guess what, they go to the individual market and get it, so they're not stuck in their job. That was one of the benefits. With these small networks, I'm having to tell a lot of people in the individual plans that, let me ask you, would you want to keep your cardiologist or your endocrinologist? Right? It's a huge, huge problem that's just boiling up. And for the employee, for the employer to provide insurance, they're back to full networks. It's a new kind of insurance. The individual's different. So you're getting these people who are saying, I'm going to go find a company and work for a company that's giving me insurance because I want my doctors. Right? And this becomes a benefit to your employees. I see a lot of companies are starting to lose really good employees because they're not providing insurance, and they're going out because they want to stay with their doctors. They care about their doctors. They care about their doctor's health. So now I got a whole group of people stuck in their job for a whole different reason. So we're back to where we were, just for different reasons. So, you know, your reasons for putting insurance in is more than, you know, it's changing for your employees, and you need to know that. Anything else anybody want to add?
Any last questions? Do you want to go ahead and do the drawing then?
You
For
got-
evaluation forms, we have 3 drawings.
Okay,
Because
so
Mike had
we'll get those in.